So, welcome to episode 15 of the Challengers podcast. I'm one of your co-hosts, Zack Miller, editor-in-chief at Tearsheet. Joining me is Josh Liggett. Say hey, Josh.
Hey, what's up? Josh Liggett, associate at Our Crowd.
And we're back. It's been a month and a half or two, huh?
Yeah, it's been a little bit. We've all been sheltering and doing our thing during COVID, but trying to get everything together. But we've been watching. Don't worry, we've been there for you, everybody. Don't worry.
And there's been a lot of action in the space. We're going to stick with some of the major points that we think are worth pointing out here. I think probably the biggest move in the entire challenger banking world is Varo, one of the first challenger banks in the U.S. It wasn't technically a bank, and has been going through the licensing, national charter licensing process for, I think, close to 5 years. They're getting a charter. They got a charter.
Yeah. So first of all, full disclosure, we actually, we invested in Varo through a fund, so we have exposure there. But it's just a good win for fintech. Like, this is great. Like, this is, whether or not you like Varo or not, like, it's really good to see a challenger bank come in and become a full-fledged bank, get their charter, get everything together. Like, everyone should be celebrating this, regardless of what your feelings are about specifically Varo.
Right. And I think it definitely benefits the consumer because we'll see some of the bigger challengers, more successful challengers, launch with their own licenses. And that means they'll be able to start taking deposits, offer better rates, get into lending, get into like sort of full service banking products.
This is sort of a question for you. Do you think this really affects the end consumer? So when somebody is going to be looking at Varo, like I'm a person on the street and not, a first adopter or first mover, and I'm, I have a JP Morgan account or I have a community bank account or whatever it is. And now I hear that Varo Bank has a charter. Do you think that's going to be a difference maker in terms of acquisition, or is that just
no?
Okay.
Like I don't think I would understand what that means if I'm a consumer, but what it will mean, I think, is that the products they'll control more of the entire product life cycle and the consumer life cycle. And I think it'll mean the products become better, I think, and more in tune or attuned to individual users as opposed to using third-party software. I think they'll just be able to get closer to the consumer, and the products will evolve, and their marketing will evolve better. And I think somebody might be aware of the changes, but not be conscious of the fact that now they have a license. You're right. I don't think it really matters, though. You could say in a time of panic, like COVID, there is a flight to safety, and people want to know that I want to do banking in an FDIC, institution. Challengers have that through their partner banks typically. So I actually don't think it'll have an impact on that, Josh.
So you're saying we're still going to see red and green and orange credit cards for getting people to sign
and all the different metals you can think of. Yes. Yes. More cards. Let it rain cards.
Yeah, I agree with you. It's the concept behind it was why I asked is because of that last thing you were saying, which is this rush to safety during COVID of
Mm-hmm.
Which is the question that I think that which can lead into what we're going to be talking about next. But is our challenger banks going to flourish, or are they going to be in trouble with COVID happens? Are people going to be more willing to adopt digital tools because they don't care about going to a bank anymore and having a relationship with an individual because they're just not leaving their house or the bank branch is closed? Or is it going to be that people are saying, listen, I want to go and make sure my money's safe in this really, really crazy time, so I'm going to go with an incumbent? So I think that's a question, a theme that we're thinking about, and throughout this conversation, and definitely big brain outside of this as well.
That's a good way to put it. And we've seen some data. Fintech usage is up, a lot, but so are incumbent bank apps. And so all the challengers continue to post record numbers in terms of account opening numbers. But you and I know, and we've spoken about a lot on the show, it really matters whether those accounts are used or become primary accounts. That still doesn't look to be the case. And in fact, there's some figures that show there's been a slight shift in market share back towards incumbents during this time period. So I think it's still something playing out. I think what's interesting, and there was a discussion about this on Forbes, Varo may be thinking about going into bank. I think this was Ron Shevlin said this, going into banking as a service, where they themselves become a platform because they now have the charter, and because there is a big demand for non-financial companies to come in and offer financial products. Varo might be a good player in that space if they can own the entire tech stack and now own the licensing as well.
Wouldn't that be hilarious?
Well,
And
kind
like
of full
meta.
circle, right? Yeah.
Yeah.
So meta. Not to be
Very
confused
meta.
with MetaBank, the partner bank, but yes, it would be totally meta. And I think this alludes to the second point we were going to talk about. So we are seeing a divergence now within challenger banking. It's not a rising tide floats all boats. If you want to talk about contrasts about fates of some of these companies, we saw Monzo a couple of weeks ago when they announced their financial results. They gave a warning about their ability to be a going concern. They're facing existential threats here. While Starling, both of these are UK banks and started within a year of each other. Starling says, there's a chance that they'll be break even in 2020 and profitable in 2021. So it's not just that every challenger bank is going to succeed or everyone's going to die. Like the model matters here, and we can talk about why the models are different. I think one of the differences is Monzo said, they were part of that groundswell of like, let's just be a global bank, like the N26s and Revoluts that said, we'll start from Europe and conquer the whole world. Monzo was late in the game to do that, but they did. They're planning on coming to America. And Starling, kind of said, no, we're pretty comfortable sticking around the UK. I think that's a big difference, right? So if you hear some of the behind the words or some of the words that the Revoluts and N26 are saying, they're also scaling back their global ambitions right now. This is not a time that they're going out and expanding. This is a time they're like re-entrenching into existing markets.
I think that it's a big part of it is, and this is something that we said, I don't know how many times on the podcast, like we've been saying probably since like one of the first few episodes, which is you need a business model that's profitable. You need unit economics, you need to make money. You can't have these situations where you're just hemorrhaging money and hemorrhaging users. You're having crazy churn. If you're not spending money and doing all these promotions or whatever. And something that I see on a daily basis is our startups that are trying to keep that balance between global expansion and trying to get there as fast as possible versus having a little bit more sure footing in terms of taking that next step. Like, yeah, you need it. So there definitely needs to be a balance between two, and I think the more successful ones are saying, listen, we're going to grow global, but at the same time, we need to have a super, super solid foundation. And that's really what those A rounds and even, maybe the B rounds, but in those really, that time, if you skip that, it could lead to a big problem going forward. And I think that's what we've seen with these challenger banks is that they just focused on expansion so much. They got a ton of money, but they didn't fix those internal models that were there from the beginning. And shockingly, when there's a downturn, it all comes crumbling down, which is not shocking to us because we've been talking about it for so long. So I really think that to me is it's not surprising, and not surprising that the more stable ones are able to thrive in this economy versus the ones who are unstable are having a lot of issues.
I think that's an excellent point. And if we look at, I think it comes back to classical banking, though. Even though we have all these new players, like still the revenue model is still relatively similar, right? So Starling did get their business accounts up and running. I think that's something like, a few 100,000. I don't want to misspeak. But Starling had introduced a premium type of business account early. Monzo still hasn't figured it out. They launched one, they pulled it back. They're still trying to find the right model, find a differentiator in their business account. But like, you got to bring in revenue. So whether that's fees on a bank account or whether that's a subscription on the bank account, like it matters. And so, Monzo focused on global expansion ahead of like real good fundamentals. And as you said, I think you made an excellent point there. And so I think we're seeing now, maybe this is Challenger Banks 3.0. I don't want to play around with, and you love these types of names, but meaning, we had the early stage, the simples, and then we had the next class. And now we're seeing some of the biggest ones, I think, mature. So certainly in the US, the N26s and Revoluts, the global brands that came into the US and launched this year and last year, they have all had changes at the top. We've interviewed some of them on our podcast, on the Tear Sheet podcast. Monzo at corporate also has seen a change in leadership. And, to me, that also speaks to maybe the maturation or just, the natural process that some of these quote unquote tech companies are now moving into sort of this different phase of their growth.
Well, they need to grow up, and they need to get more real. And so it's also probably just heads need to roll. I imagine that's part of it.
Probably.
Just like we need someone to blame.
Fall guy.
So,
Yeah.
yeah. Like was that, that was a movie with Jim Carrey where he gets promoted right before a big fraud and gets like, and he's the fall guy basically. So
Exactly.
I forgot what it was called, like Dick and Jane or something like that. I don't know, but yeah, I mean, shocking or not, like I said, shocking but not shocking is that you're going to have restructuring and reorganizations, and this person's got the new secret sauce, or this person's going to run it for a little bit. That's just it's not great usually. It's usually not the greatest sign in the world, but it's going to be it's a question of differentiation. And going back to Starling, like looking at they've have business accounts open for what, 2 years, something like that, and like now all of a sudden people everyone's like, oh, July of 2020, let's do business accounts. Like, okay, like, well, you can't really change an oil taker in move it that quickly, and it's hard. Now you're competing in someone else's turf, and sort of a lot of these challenger banks that moved cross border and into different internationally, they've had issues because they're not playing in their home turf, and it's expansion, and it's not easy, and they have to spend a ton of money. And so, yeah, when it doesn't work out, obviously the person in chart's gonna have to go find another job, which is not surprising.
I have my money on TransferWise being the global challenger bank, right?
You love TransferWise.
Well, I just think they're sneaking in, and no one's really talking about them. Like, obviously, everyone's talking about Amazon getting into banking, Goldman, and and the Apples and Facebooks and WhatsApps and all that, but like, I just feel like they built a global system. They know how to make money, and they're slowly rolling out banking products. So anyway, that's just an aside.
You could take them with your first pick. I'll take Ant Financial with my second, and I think I'll be very happy with my pick with
your $200 billion IPO. I don't think there are enough zeros. Yeah.
Yeah,
I'll take Ant. Zeros.
I'll take Ant. And enjoy. Have a nice day.
Okay, you win.
Well, do you remember? Do you remember that we wrote one of the first articles I wrote at Tearsheet was about TransferWise trying to take over the world, and we I remember that you and I were discussing, and you're like, "Do you really think they're doing this?" And I was like, "I think so." And we ended up actually talking to them, and like getting when I interviewed them, they're like, "Yeah, we're basically trying to do that."
Yeah.
And it's like, "Oh, cool." So we have like. Back in 2017 or 2016, we actually have like an article that's like, yeah, the TransferWise saying, yeah, this is what we're trying to do. And like you said, they're sneaking their way into it, but they're also working with banks, which is interesting. They're doing both together. It's really
that's true. That's awesome. So one thing I want to touch upon, moving on ungracefully to the next topic, some of the new players in the space. So since our last podcast, we've seen Kabbage, the online business lender, launch a bank account, as well as QuickBooks. So Intuit's business accounting software package launched QuickBooks Cash. So both focusing on small business. Very interesting offerings, I think, and both coming at business banking from different perspectives. But two powerful offerings. Intuit and being tied into the whole QuickBooks ecosystem and being on their software, and you could think about all the possibilities there about being able to forecast cash flows and lending off of that and spending the money. Like I don't know. It sounds, if I'm spending a lot of time in QuickBooks anyway as a small business owner, like I do have an affinity towards a brand. I feel I'd be open to using QuickBooks Cash and Kabbage if I'm a small business and I'm tapping credit because I need it to grow or need it to survive, like also very tied in, and those are to me, both very smart products.
It could be that Intuit turns into like a dip in the toe for a lot of these traditional like small businesses that were usually not interested in something, a digital offering or any sort of account like that, where they're like, oh, well, Intuit's doing it, I trust them. Like you're saying, like I've used them a million times all the time, or I'm using them all day long, and they have all my data already. So sure, why don't I try it and see what it's like? So it could be sort of like a entry, gateway drug into the digital banking space. Kabbage, I don't know. I mean, as of like 20 hours ago, Kabbage might be bought for less than what their previous, valuation was.
Mm-hmm. It was 850 million by Amex or something like that.
Yeah, something like that. So it's nothing confirmed. I mean, PitchBooks is acting like it's a done deal. At least when I searched it today, it was like, yeah, it's done. But who knows if it is or isn't? And so it's gonna be interesting if they continue to offer that if the Amex sale goes through, and then if they continue to offer that, if, after Amex buys them and they're part of them. So that'll be interesting. Who knows?
And I guess the last thing, and we touched upon this before, was sort of this interplay, and I hate this sort of false dichotomy that is set up, sort of incumbents versus upstarts. We are seeing some data that I alluded to in the beginning of the show about, upstarts maybe getting a little more market share in this market. As we said, maybe it's the flight to safety. People, need to feel like their banking institution is going to last through this process. Maybe they got their, the government assistance checks from their incumbent bank. Where do incumbents and upstarts kind of fit? Does COVID give an advantage to the incumbents because of this trust component? I know we're working on a story probably that's going to come out this week on the same subject. You have anything to add to that conversation, Josh? Or
it's so tough. It's so tough because I think, you and I sit so like we're on like the cutting edge of tech, or at least I hope we are. We're talking about, we'd love to be using these challenger banks and digital banks and really getting to really the mainstream population, which is really the biggest chunk of finance, which again, finance is so freaking big. It's just like stupid, how big it is compared to other markets. And I still think there's in my mind, I still think there's a lack of trust on Main Street, and I think of it like my dad. Would my dad use something like this, a challenger bank? Absolutely not. He wants somebody to talk to, even on his digital brokerage account, that he uses for trading. He wants to talk to somebody, the ability at least to talk to somebody, not a bot, not a, wants to know that there's a person he can visit them if he wants to. I think a lot of people are still holding on to that theory. It could be also that people think that, COVID is a big deal right now, and maybe in 6 months we get over it, maybe in a year, maybe in 2 years, but eventually, that this, using this stupid word that everyone's saying, that this isn't the new normal. I think really that's what's going to be the big factor, is like, what is going to be the situation once the COVID is resolved on whatever level that it can be resolved.
I think that's an excellent point. I didn't mean to cut you off. Did you finish?
No, I finished. It's all good. Rambling.
You weren't rambling, but maybe the Kabbage deal, again, it's not banking. It's really digital lending, and they got, many of the digital lenders really just turned off the spigot in March. Maybe them breaking, having a down round takes a little air out of some of the valuations in the whole space. Maybe we start to see some consolidation as well. Maybe somebody picks up a Monzo, as a brand, or picks up, I don't know, that this could be the beginning of that process.
I think what we're talking about, sort of like Challenger 1.0, 2.0, 7, whatever 0.0 we're at, 3.5, I don't know, pi, Challenger pi. That's be my new thing, the word Challenger pi. It's similar to cryptocurrency, and stay with me on this for a second. That Bitcoin started as this counterculture revolutionary concept, right? That's what it was like, meant for like people that want to get off the grid and be, totally, independent from the financial system, and all that stuff. And it's turned into an alternative asset, where if you look at like what happened during, the S&P, like during that first dump of the S&P 500, the cryptocurrency market basically had the same followed the S&P. Like it wasn't inverted. It happens to be growing now, but so is the S&P. Like it's turned into an alternative asset because you have so much institutional money, because you have these large players that are now pouring money into the space. And it's sort of and this is something that, Fred Wilson spoke about. I think there was a debate back in the day between Fred Wilson, not a debate, but like a video between Fred Wilson and one of the original, chairman of R3, talking about like where Bitcoin is going and who's running it and what's it turned into, the institutions versus, the old school, hackers. And with challenger banks, like initially it was supposed to be, the answer to 2008, right? That in my mind, at least, it was supposed to be like, we're going to create something different. And now it's going to be, a totally different thing and a totally revolutionary thing. But it could be that it just like 3.0 is a front end for a bank, that they get that a bank comes in, buys them. And this is something that we worried about, was like, if a bank were to buy N26 or Monzo, like what would happen to customers? But maybe that's what it turns into. And it's sort of operated in conjunction, but independently with each other, sort of similar to having like the initial thoughts of the market being sort of doused by reality and execution and just acceptance and timing of the overall world. But it could be, it could be, but I could see that being an interesting place going forward.
I like that, Josh. I think that that's a good ending for us on episode 15 of the Challenger podcast.
And the excuse for me to talk about crypto, because
you always got to work that in everywhere, right?
Always.
Anyway, Josh, thanks for joining us as always, and thank you guys for listening.
Yeah, thanks everyone. Thanks for having me, Zach, and always good to chat.